Hello, currency traders. This is Imri, and welcome to today's currency recap. It is June 15th, otherwise known as the day after Fed Day. Wow, we have seen a lot of market movement today. Volatility is back, currency traders, which is great news for us. In currency news front, yesterday the Fed decided to put in place what some folks are calling a hawkish pause. So they've stopped hiking rates, at least for now. Now, this pause in June marks what would have been an 11th consecutive rate hike. But alas, we don't get 11 consecutive rate hikes. We might get an 11th rate hike, but that would only be in July. Ask the market, however, whether they think that's likely, and the answer is a resounding no. The ECB, however, has raised rates and is basically saying they have no intention of pausing anytime soon, so they still have higher to go, and as a result, that has sent the dollar lower against its peers. Equities greatly outperforming. We're maintaining a bullish +3 rating there. We're going to dig into that in just a little bit. All right, so we've met the first target from that inverse head and shoulders I was talking about, and now the second target of 45.12 is in focus. I think we are going to indeed hit that, and then we'll take it from there. However, in the short term, conditions are quite overbought, so it remains to be seen how this will play out. Is the bull market over? What do you think? I would love to know. I've got my own thoughts on that from a long-term perspective, but in the short term, I think it's very difficult to be anything but bullish. And that takes us to the 10-year yield, which had a large reversal. We've been trending steadily up in June, and then we just got smacked back down in one big red angry candle today. So we're trading a little under 3.75%. There's potential for us to drop to 3.6 or 3.5. So testing the 50-period daily, the 50-period moving average there. And on the crypto side of things, I've been talking about this ascending channel for a little bit now. Too early to say whether we've bottomed out. We really need to get back above both moving averages. But if risk-on appetite is back, I'd expect to see Bitcoin start stabilizing and putting in a bottom. So it's not too exciting right now, but it has the potential to be tradable once again in the coming days. So like I said, sticking with a +3 reading here, we're above both moving averages, and the slope is decidedly positive. Now, tomorrow we have the Bank of Japan press conference. It's tentatively scheduled. Remains to be seen how much of a market mover that's going to be. But at 10 a.m., we have the preliminary consumer sentiment report coming out for the US, which could definitely impact the dollar further. Moving on now into currency analysis, starting off with crypto. So crypto had a pretty good day with Bitcoin Cash somewhat surprisingly leading the way here. And then in second place was Litecoin, then Bitcoin, and finally Ether. In terms of the fiat side of things, the Aussie dollar greatly outperformed today. And then the European currencies also outperformed, with the Swiss franc, the euro, and the pound all having a pretty good day. New Zealand dollar and the Canadian dollar somewhat flat, and then our two losers were the yen and the US dollar. No surprise there, given the risk-on appetite in the markets at present. So in terms of velocity, pretty straightforward here. Those European currencies I mentioned, plus the Aussie, make up the right-hand side of this sliding scale, and on the far left-hand side, we have the yen and the dollar. And as we take a look now at some potential trades, we're going to go over exactly that. So first off, we have the yen. We've broken below this long-standing support here, which held us up in October 2022 and September 2022. And if I zoom out, you're going to see how interesting this level really is. I mean, we're pushing historical extremes here. We're close to where we were in 2007. Not quite there yet, but we're getting close. So it really does make me wonder how much further scope there is for yen weakness. I mean, there's nothing that says we can't break below this low in the basket, but given the momentum signatures on the monthly, we got mildly overbought, but we still have a bit of room before we get oversold. So that would be in favor of a bearish argument. On the weekly time frame chart, we got really oversold, and then we bounced back up, and there's still room to go. So the weekly chart tells me that there might be more yen weakness in the cards, and the daily time frame is really where we start seeing some oversold signatures. So it'll be interesting to see what happens. I mean, we're quite stretched out now. I wouldn't go chasing some short yen plays here, but I think after the yen rallies and bounces back a little bit, it could be good for another round of decline. All right, US dollar is a tricky one. So yeah, very weak in the face of the Fed announcement. We topped out towards the end of May and been drifting steadily lower ever since. This kind of looks like a descending triangle to me. And if we break out the bottom of this trend line, it will put my downside target in focus of 118, 119. And that lines up with the bottoms from May 10th this year and April 14th of this year as well. So if we take that out, then I think that opens the door to much lower in the dollar. I do think we are going to see significant dollar weakness in the months ahead, but I'm not ruling out a sizable bounce here. I mean, in the daily time frame, we're still far from being oversold, but on the 4-hour, we're flirting with some pretty extreme levels. Same with the 8-hour, and then on the shorter time frame charts, we're very oversold. So I think it's quite likely we do see a bounce in the dollar, and that bounce can likely be sold. All right, the Swissy. And the Swissy's really been going back and forth. This looks like a corrective pattern to me. I think we're eventually going to break out the top of this and head higher to test 139.89. Euro, so we made our way into support, and I think it's likely we're going to trade a little bit higher here to test the highs from towards the end of May. So that puts the 133 level in focus. So I think we have a little bit higher to go in the euro as well. With the pound, we're nearing that first target, or this big target that I've been laying out for weeks now. I mean, this is just such strong resistance. I don't want to be buying the pound anymore, not as we're heading into that wall of resistance, and we're getting close to getting overbought on the weekly chart as well. So I'll actually be looking to short the pound as we trade into this resistance area. That doesn't mean I'm just shorting it blindly. I really have to wait for the right setup, but I think the risk-reward equation is starting to skew strongly towards the downside. Okay, Canadian dollar, we've cracked this trend line and just kind of gone nowhere. This looks, I mean, you have to give this uptrend the benefit of the doubt for sure. On the daily time frame, you can see we're bouncing off the 20-period moving average. This is a really tough one to call. Gun to my head, I'd say we probably have a little bit lower to go in the Canadian dollar. Maybe we test these prior tops, right, from let's see, where is that? February 2023, March 2023, April 2023, May 2023. So there's a lot of tops here. This should offer very strong support. I'd be a buyer of the loonie, in that rough 86 cent range or so. Moving on to the Aussie, I said I wouldn't be interested until we broke out of this pink resistance zone that I had drawn on the charts. You've seen that on my chart for a few weeks now. Well, we've broken out. I'm a buyer on pullbacks. It's that simple. How high can we go? I really look for us to test the highs from the beginning of this year. So the January 2023 highs. Quite a bit of upside left. The Kiwi, however, is a little bit different. So we made a new low here, and this could be a bear rally. It would be kind of strange to see the Aussie and Kiwi diverge that much, so I don't feel very confident making this call, but this has served as very stiff resistance. So I'm going to give the technical area on this price chart the benefit of the doubt for now. I guess what this tells me is that I don't want to touch the New Zealand dollar, but I am interested in trading the Aussie. So that's it for the currency baskets, traders. Hope that was helpful. Long story short, I'm still looking to be a seller of the yen on pullbacks. That's probably my favorite trade. I think the dollar is a little bit trickier, and I think the Swissy and the euro have more runway higher, as well as the Aussie, whereas I think the pound might be close to getting toppy. So in conclusion, like I said at the beginning of the recap, volatility is back, and that just means it's very important to pick the currencies in play. As far as liability currencies go right now, I really like the dollar and the yen. And because volatility is back, just ensure that you're focusing, as always, on proper position sizing. Okay, thanks, traders. That's it from me. I'll see you next week.